Cocoa Beach condo buyers, the mortgage payment is not the full cost, but in 2026, the mortgage is just the beginning. If you're looking at Cocoa Beach condos, especially an oceanfront or beachside building, the real monthly cost can include HOA dues, association insurance, your own condo insurance, flood insurance exposure, property taxes, reserves, and sometimes special assessments. And those extra items can completely change whether the condo is a smart fit or a stressful one. So in this video, I'm going to walk you through what buyers need to budget for before they buy a condo in Cocoa Beach, which costs people tend to miss, and the questions I would ask before writing an offer. I'm Carrie Leota, a local realtor here on Florida's Space Coast, and I help buyers compare the real numbers behind Brevard County homes and condos so they can make a confident decision. And before we get into the numbers, I also have a private Facebook group called Moving to Brevard County, Florida. It's a place for people to do research, moving to Brevard County, to ask questions, compare neighborhoods, learn from locals, and understand the Space Coast life before they make the move. Just scan the QR code on the screen right now to join us. Let's start with the biggest mistake I see. A buyer looks at a Cocoa Beach condo listing, sees the price, runs a mortgage estimate, and thinks, okay, I can do that. But condos do not work like single-family homes. With a condo, the list price is only one part of the ownership cost. You also have to understand the building. The building's insurance, reserves, maintenance history, age, inspection status, amenities, and association finances all matter. Two Cocoa Beach condos can be listed at similar prices, but one may have a much healthier association, stronger reserves, lower assessment risks, and clearer documents. The other may have lower dues on paper, but bigger unknowns in the background. That is why I do not want buyers shopping only by list price. The better question is, what does the specific unit in this specific building actually cost to own month after month? The first major line item is the HOA fee. In Cocoa Beach, HOA fees can vary a lot depending on the building, location, age, size, amenities, and what's included. Oceanfront buildings often have elevators, concrete maintenance, roofs, balconies, pools, lobbies, landscaping, fire systems, plumbing, security, management, and master insurance. All of that has to be paid for somewhere, somehow. So when you see a higher monthly HOA fee, do not automatically assume it's bad. In 2026, a higher HOA may simply mean the association is finally funding the real cost of maintaining the building. What worries me more is an older oceanfront building with an unusually low dues and no clear explanation for how they are handling reserves, repairs, insurance, and long-term maintenance. Low dues can feel good up front, but if the association has been underfunding major needs, the bill may show up later as a special assessment. That leads to the second line item, reserves and assessment risk. Florida's post-Surfside condo reforms changed the conversation for many older condo buildings. Certain residential condo and cooperative buildings, 3 or more habitable stories high, may need milestone inspections, and associations also have to deal more directly with structural integrity reserve studies or SEERs when they apply. In plain English, the association has to look at major building components and plan for future repair and replacement costs. That can include things like roofs, structural systems, fire protection, plumbing, electrical systems, waterproofing, exterior painting, windows, doors, and other qualifying building components. For buyers, this matters because the costs may show up in one of 3 ways. They may show up as higher monthly dues, they may show up as a special assessment, or they may show up as an association loan, which still has to be paid back by the owners. None of those are automatically deal breakers, but they are absolutely things you want to understand before closing. If a building raised dues because the reserve study showed a real funding need and the board has a clear plan, that may actually be a sign of a responsible management. If a building has vague answers, delayed repairs, unclear meeting minutes, or owners arguing about surprise costs, that deserves a much closer look. The third line item is insurance. Condo buyers sometimes assume the HOA covers insurance, so you're good. That's not usually the full story. The association's master policy typically covers the building structure and common areas, but you will usually still need your own unit owner policy, commonly called an HO6 policy. That policy may cover things like interior finishes, cabinets, flooring, personal belongings, liability, and loss assessment coverage, depending on the policy. And in Cocoa Beach, you also have to think about flood and wind exposure. A lot of standard homeowners insurance do not cover flood damage. Flood insurance is separate. Depending on the building, the unit, the flood zone, the lender, and what the master policy covers, you may need to look closely at flood coverage and your own owner policy. This is where I want buyers to talk with qualified insurance professionals before they are too far into the transaction. Do not guess. Ask what the association policy covers, what your HO6 policy needs to cover, whether flood coverage is needed or recommended, what the lender requires, and whether there is a loss assessment exposure if the association has an uncovered claim or large deductible. The fourth line item is property taxes. This is another place buyers can get surprised. Do not only rely on the seller's current tax bill. In Florida, the assessed value may reset after a purchase, especially if the seller has owned the property for a long time or had homestead protections. Your future tax bill may look different from the seller's current tax bill. The Brevard County Property Appraiser's tax estimator is the best local starting point for modeling this. It is not your final bill, but it helps you think more realistically. You want to estimate taxes based on the purchase price, your expected exemptions, and how you plan to use the condo. Is this your primary residence? Is it a second home? Is it investment property? That can change the long-term tax picture. So when you're building a monthly budget, do not use the seller's tax number as your only estimate. Use it as a clue, then model your own likely number. Now let's put the monthly framework together. If you're buying a Cocoa Beach condo, I want you to add up more than just principal and interest. Start with the mortgage payment, then add HOA dues, then add estimated property taxes after purchase, then add your HO6 condo insurance, then add flood insurance if needed, then add utilities not covered by the HOA, then add a cushion for assessment, repairs, or future HOA increases. That final number is the number that matters, not the list price, not the online mortgage calculator, not the seller's tax bill, the full monthly ownership number. That's how you know whether the condo actually fits your life. Now, before you write an offer on an oceanfront or beachside condo, there are several questions I would want answered. First, has the building completed a required milestone inspection? Second, has the structural integrity reserve study been completed, and what did it recommend? Third, are there current pending or recently completed special assessments? Fourth, how much has the HOA fee increased over the past 3 years? Fifth, what does the master insurance policy cover, and what does the owner need to insure separately? Sixth, is the unit in a flood zone that affects financing or insurance? Seventh, are rentals allowed? And if so, what are the minimum rental periods? And eighth, do the meeting minutes show major repairs, insurance problems, association loans, owner disputes, or other issues you need to understand? That may sound like a lot, but this is how you protect the dream. Cocoa Beach can be a wonderful place to own. You have sunrise walks, beach access, rocket launches from the sand, walkable restaurants, a lock and leave lifestyle, and that classic Space Coast feeling. But the goal is not just to own the view. The goal is to own with a monthly number and a building situation you actually understand. Now, let's talk about second home buyers versus investors, because the analysis is different. If you're buying a Cocoa Beach condo as a second home, the big questions are lifestyle, carrying costs, convenience, insurance, and building health. Can you comfortably carry it when you're not there? Do the dues make sense for the amenities and the maintenance? Is the building being managed responsibly? Would you still feel comfortable if dues increased or an assessment came up? If you're buying as an investment, the numbers need to be even stricter. You have to look at rental rules, minimum lease periods, association approval rules, local regulations, management fees, cleaning costs, taxes, insurance, vacancy, repairs, and whether the income actually supports the risk. Here's a key point. Do not stop at Cocoa Beach allows rentals. The condo association's governing documents control what you can do inside that building. One building may allow shorter rental periods. Another may require monthly or annual leases. Two condos just a few blocks apart can have completely different rental potential because of the association rules. So whether you're buying for personal use, retirement planning, a second home, or investment income, the documents matter. My local take is this. The best Cocoa Beach condo purchases in 2026 are not always the cheapest units. They're the ones where the price, HOA dues, reserves, insurance, building condition, rental rules, and lifestyle all line up. Sometimes that means paying more for the building with better transparency. Sometimes it means walking away from a pretty view because the financial picture is too unclear. And sometimes it means realizing that a condo is a great fit, but only after you have built the full budget and reviewed the building documents carefully. The bottom line is simple. The mortgage is only the beginning. If you're considering a Cocoa Beach condo in 2026, you need to budget for HOA dues, owner insurance, flood exposure, property taxes, reserves, utilities, and special assessment risks. Buyers who understand those pieces can still find strong opportunities. Buyers who ignore them can end up owning a view they love and a monthly number they can resent. If you're thinking about buying a Cocoa Beach condo and just want help comparing buildings, reviewing questions to ask, and understanding the local ownership picture, I would be happy to help talk you through it. And remember, I also have a Facebook group called Moving to Brevard County, Florida. If you're researching a move to Brevard County, just scan the QR code on the screen right now and join us there. It's a good place to ask questions, compare neighborhoods, and learn from locals before you make a decision. I'll see you in the next video.